Okay, folks, good morning. Welcome to the first live session of November, third month of our mentorship. All right, we got the dollar index. We still have a little bit of a void in here. Now, obviously, we have FOMC today, so take a look at your economic calendar. You'll see that's later on in the New York session. Okay, and we may end up closing this range, filling in this void as a result of the FOMC release at 2 o'clock New York time. That's 2 p.m. New York time. But we have news coming out in about 42 minutes or so for the British pound. Okay, so we have stops right above these highs in here. Now we have already started to see a little bit of a push higher on the day, but that would be expected because of the weakness that's been seen on the dollar. Okay, so we've already had an initial run here. We've already seen price come off of this down candle with this move right here. All right, here, let me zoom in for you. Okay, so we have this large down candle compared to this one in here. This one is inside of this candle, so it's really this is the parent bullish order block. Prices dip down into mean threshold here. I'm going to borrow this line just for a second to show you something. Notice the wick here. The wick here touching that same level, then it hit it again here. So we've already expanded a little bit in here. So this is we're noting the opening price for New York. So price dipped down below the opening price here. So now what I'm watching for, so you can get a feel for what I'm expecting. We have FOMC later on in New York. So my thought process is going into today, we've already initially seen an initial run, and that's fine, that's okay. I'm looking at that buying in here. I want to see price, hopefully, drop down into this range right here. Good grief. Now, I want to be reminded that this is there. As a new trader, you want to do this, but now the focus is primarily on this level here. And what I want to see is I want to see price between now and 5:30. Preferably if it can stay in this little bit of a range here and not make a new high on the day. I want to see it stay in this range here. And then at 5:30, if the numbers release, I want to see it drop down and hit that level. I'm allowing it to trade down into this level here to be ideal. You don't want to see it because it's already opened on this candle here, traded down. So that portion of this down candle has already been traded into. So the only level of sensitivity we're looking for is this candle here's high, 122.53 right here, because we have two consecutive down candles. So we're looking at a range of most sensitivity here. Right in here. So ideally we want to see price drop down into this. This would be new buying. If we can drop down on that news release, and the expectation would be to see that and then expand up and then reach for the liquidity in here on the daily chart. And that's why you see that level 2330 on my intraday chart over here, because I think that's where the liquidity is resting right now. Now, even if it doesn't get all the way up there, if we get a move from, say, an entry of 122.60 to 122.55 in there, if we get a run above the high here at 22.85, that's 30 pips. So that'll allow us to bank something. And then it'll be a sweep one more time on the highs. And again, we don't want to see it run from here. If it runs, then this falls off in terms of probabilities. And the reason why is because of the FOMC release later on. Traders are going to be wanting to sit on the sidelines going into that. So between now and New York opening, that's that small little window of opportunity that's usually there for FOMC days. Sometimes it doesn't happen at all, but usually between now and when New York opens, you get that little bit of a small window where the range will post for the intraday action, and then all of a sudden the noise will come out relative to FOMC. So in summary, again, initially right now, I'm looking for the market to consolidate in here, not to break down. If it does, we move to the sidelines. We don't do anything. Okay. So if we lose the middle of this down candle here, we move to the sidelines and wait. That means we may not get a trade. Folks have discovered my phone number. Okay, so the upside objective is obviously the 123.30, and it's the stops relative to the daily chart over here. Now, it doesn't mean that if we see it run up to that level that it's over. It doesn't mean that that's all there's possibly for the daily range. It could sweep above this high relative to the daily chart and then consolidate around there between 2330 to 2320 in that area. And then it'll hang around there potentially and then expand up into when FOMC numbers come out 2 o'clock in the afternoon, New York time. We could see the 2380 to 24 big figure as upsides for pound dollar. Okay, so right now we're just focusing primarily on it wanting, hopefully, to stay right in here, not wanting to run, because to buy it in here, it's a little too rich. Okay, it's too much at a premium, at least on the daily range, because it's at the high of the daily range right now. We want to see it come back down a little bit, go into equilibrium or discount, which is what this will be here. And it's very, very hard as a new trader, especially in London, because you're expecting the daily range to be forming its higher low. And you want to get in it, you want to rush to get in it. Don't do that. Just relax. Because the wonderful thing about London is when there's not FOMC, it gives you an opportunity to miss the boat on London, and you gain insight that you can use going into New York. And you can always potentially salvage something out of the daily range because of that. So that's why you have to be really selective about London. So while this is cooking, okay, we're going to take a look at the euro just for completeness sake. Okay, and we're almost at the low of this candle we talked about as objectives, 111.05. So we had 111 big figure to 111.45 to 111 mid figure. It's up in here. So we saw a continuation. They still might dip into that a little bit more because there's nothing in here indicating that should be a barrier. It's too thin. It's all the wick. So it's been a real nice move off of the euro dollar. And we'll take a quick look at euro pound. And I still think that we're going to make a run at least to try to get up there and close in this. But be mindful because we're just now breaching the bodies of the candles here. Not the wicks, think of the bodies now. We're just now getting above that. So you got to be careful because when we start talking about institutional order flow and market structure in relationship to that, that's what you would only expect to see. But because of this big run in here, I think they're going to want to try to revisit this range because there wasn't much in terms of liquidity offered up there above the 92s for euro pound. So given that, I think we'll see a little bit more on the upside for euro dollar, which in a way limits the cable, but we're not really expecting a whole lot from cable initially right in here. So far it's behaving like we want. We want to see it stay in this little consolidation. And again, at the numbers release at 5:30, we want to see it drop down into that level there. And then we're going to be looking for a long. Dollar CAD. Okay, so we've seen that 134.05 level swept again. And then we saw it give up the ghost in here. And I'll talk more about dollar CAD later on in the day as a recap, but I just want to visit it real quick. We've seen that 33, what is that? Yeah, 33.52, I think it was. Yeah, 33.53. There's stops resting below that. More so today than there was before. We have had 1, 2, 3 times that level has been touched. Obviously, there's sell stops below that. the market's been going higher. They swept this level here, 134.05. They've held it in consolidation at the same time that the dollar itself has been really, really weak. So at some point, the U.S. CAD is going to have to snap and get with the program. And it means come down here and clear out these stops in a more convincing fashion. And we identified these levels in here as potential downside objectives for dollar CAD. And I'll leave that to you to go back and watch the recordings made about that. So I think that's where we're going to see price reach down in there. We may see that as a result of just the 530 numbers alone could cause the static that would be necessary. You can see we've only really just worked that 134.05 level, and again, when you maximize this, you can see why that was even mentioned. Let's see equal highs up in here. That's all I was looking for here. And again, it's a daily chart, so that's where the liquidity would be. Now, I'm not calling a top. I'm just saying that that's where the market was going to reach for. And we've since seen it revisit that level a couple of different times with no meaningful movement higher. So far, it's behaving still. That's good. Now, some of you may be looking at this and saying, okay, the market is moved up after midnight, New York time. And what about this void over here, Michael? Isn't this something that's significant? Should we be concerned about this? Yes, you take a note of it. Okay. Obviously, you know there's a range in here. This is our gap. We have the range on this up candle. We've had it traded to twice in here with this first run up here. Then it came off the high. Then the next candle, which created that big run, it ran through this whole area right in here. So this whole area and range has been traded to twice. Even though we have a wick here, it's been offered twice through. The market comes down. This portion of the up candle has been traded to twice with this wick down here. So this is the exposed area, or where there's a gap. I do see it. I'm aware of it. Okay, but my thought process is, and I really don't want this thing to run here. If it runs, it's going to be a wash for the morning. And I would really, really like for this thing to give us an opportunity to trade this. Then everybody want to see London. But we've seen this run up. The market's remained in a consolidation. But inside the consolidation, look what we've seen. The stops below this low and below this low, they have been swept right here. Okay, so the market moved up. Okay, and then we had short-term low in here, violated right here. We've run. We've broken market structure up here. It should have wiped out right here already. It should have just washed out and went lower. Even with the news coming out, a little less than, 23 minutes. So I like the fact that we've poked through yesterday's high with no convincing selling. We've shown a willingness to support this down candle for buying. We went below the opening here. The algo showed a willingness to want to run higher. It did. Then we recapitalized this down candle, so they allowed some new buying in here. And now they're doing exactly what we would hope to see, holding in a range. it's pausing. Okay, so we have a bit of upside objective still, and that may be all that's necessary for it to run up there and hit that 2330 level, 2335. It could expand rather to 2350, and then it could cause a little bit of a selling back down into 2280 because of FOMC. And that's why it's got to be real quick. It's got to be nimble. And we have to wait for it to trade down into this range in here. Okay, so as soon as it hits in that level here, you'll see me execute along. And I'll put a stop loss of about 30 pips. And we'll see if we can get 2230 out of it. But if it runs in here ahead of the news, we got to wait. It's far less likely or probable for it to, say it runs here and goes higher, and then it comes back down into that. I don't like that so much. I'd like to see it drop down in on the news, and then after that, see the market expand. Again, when we look at the economic calendar, we're not trying to pick the fundamental data. Okay, what we're trying to do is anticipate where the algorithm will seek liquidity, and there's going to be willing buyers down in here. The algo will allow those orders to trip and then expand up to go to the most logical area, which would be the daily highs over here where there's going to be buy stops. And why would we want that? Is because the market's showing an interest in wanting to go higher. So we know that they have a long book right now. That book can profit by selling its longs to willing buy stops above 2330. So we know there's liquidity up here. There's small number of liquidity in terms of buyers in the previous high yesterday. We saw that. But notice how they are keeping price real tight after that. Because while they scaled something off here, they're really looking to book their profits above 2330. And maybe even high as 24, big figure. So that's what we're waiting to see unfold for today. Well, we're going to be doing a lot more of pre-market analysis and kind of like setup and framework, kind of what you just saw me outline and why I was talking about what I was talking about and why this is important and why the 2330 level is important. That's actually going to be sent to you by way of charts. I'm not going to be doing videos at 12:30, or 1 o'clock in the morning, my time, because it's a lot of video work, and you'll be expected to see that video recording, and I don't want to be doing video recordings and editing during that time of day. So it'll all be done through charts, and that way you'll have the framework with all the notations and such. That'll give you the idea of what I'm expecting, and then when the live session is due to set up the signal for us to be watching and studying the price action for a learning experience or drill, the live session will begin right before that. Like today was a little bit early. usually, like for instance, for a 5:30 event, it would usually be around, like right now, we would start the live session, giving me about 15, 20 minutes before the actual setup, because you already have the framework of what I'm expecting relative to the charts and the analysis I share on around 12:30 my time in New York. I'm in North America, specifically in the state of Maryland. So I'm on East Coast time, or basically the same time New York time is. Did I ever trade London when I had a 9 to 5 job? I actually traded the S&P right after midnight New York time, and I would usually trade it up till 2 o'clock in the morning, and then I'd have something I'd hold on to. But that was back when that was trading Globex then. But only the folks that did not send me their satisfaction for the delivery of the content for October, they're the ones that have not received the November information and their username and password, because I told you that's what has to happen. I did video work, I did posts on our forum, and I did tweets. So I'm not sure why everyone's ignoring that, but I had a couple people say they've been ill and they've not watched any of the videos since August, so they can't give me a satisfaction survey. And I find it a little hard to believe. I'm sorry, but you've not been here that long and not watched nothing. Okay, so you either tell me you've got what you're supposed to got, or it's time for you to go. I saw a couple of them come in. Yeah, I mean, I'm not saying that somebody's not been sick or something or had an issue in their family, but since August 21st, to say you've not watched anything, but yet you still keep making the monthly payments. And then when I ask for proof that you got what you were supposed to get, you don't want to supply it. It looks a little fishy. It looks a little fishy, because once you give that to me, your chargeback's impossible. So that you won't be getting your November username until you do that. No, I'm not going to be making a new Twitter every month. I did that because a couple of people changed their Twitter accounts and moved things around because they were asking questions or sending stuff with their followers watching. And folks are still doing that. They're sending tweets with pictures or things that we're supposed to be keeping in the mentorship private. And I reached out to some of them and asked them to change their Twitter or dump their followers. And most people don't want to do that because it's too hard to get Twitter followers unless you buy them. All right, let's focus, folks. It's just very easy for me to be distracted and the whole thing unfold. And if I miss it, it'd be a little bit embarrassing because we're chattering. Okay, so it looks like we're getting ready to drop down in there. Again, I'd really like to see it stay here, not do it yet. I'm on a 30-minute chart. I'm answering a question I saw before I closed the little window that everyone's commenting in. And just as a point of reference, a lot of folks have been asking, where am I supposed to ask questions at when we're doing live sessions? And I'm not really trying to encourage that, because chances are about 98% of you won't have your question answered, because I'm focusing more on these candles than I am your questions. If I focus on every question that would possibly come across during a live session, I would never be able to see price. And basically, you'll become an indicator. I'll be looking at you instead of following price, which is the benefit, and that's why some folks are in their survey, and I appreciate your honesty, but you're saying you don't like the market reviews because you learn more from watching live trades. And I get that, but you're really asking to get live trades for the money, because the review is the same thing. But I like the 30-minute chart because it's given me very clear references to where the market moved away from the opening price, where that order block begins, and potentially this one here starting a little bit earlier at that 22.53 level. If we go down into a 15, we have this one here, but the mean threshold is still this lower one here, which is what I want to see. I want to see it get down and then hit that. I want that one. It may only give me this level here, 22.53, and never even drop below that. Or I could be completely wrong, and it's just runs right on through on the news. But given it's FOMC day, I think they're going to drop it down, use the news to masquerade that want to drop, and then maybe see it run to 23.30. That's my expectation. Now, again, if we lose the middle of that order block that we had on the 30-minute chart, which I'm going to go back out to because I don't want to watch the 15-minute here because I think it's a little too noisy. And by that, I mean it's too busy, too many whipsawing up and down. I'm going to watch it go right into this level here. Again, this is the numbers that's going to come out, the construction PMI. So that's the number we're waiting for to get some kind of a knee-jerk reaction in price. It's high impact. So that's why we're focusing on this specific time of the day for this particular currency. And we don't see anything else until against the dollar until 8:15 in New York time. Okay, so we're about there. Let's get ready. I got 7 minutes left until the numbers hit. I like how it's staying above the area I want to see it go into before, or actually after. As soon as the numbers release, I want to see it drop down in between these two lines. And I want to see the price hit this level right there at the time the numbers release. When it does that, I'm going to wait maybe 5-10 seconds if I can wait that long. I want to see if it drops down into this candle here. If it reaches into this candle's wick here, I might wait a little bit longer. Okay, I want to see after 5-10 seconds after the numbers hit, once it hits this level here, does it want to go below it? Because if it does, I'll wait a little bit longer before I take the entry. But I want to see it stay above and go down into it as a result of the numbers release. That's what I want. Then I'll take the long. Because the closer I can get to entering to this candle's high, the closer I'll be in terms of where the stop needs to be. Around 122.25. Or, I'm sorry, 122.15. We're going to have a 30 pip stop on this. Actually, I just said that wrong. Just caught myself. We're going to we'll have a 30 pip stop, which will be at 122.25, which will be below here. We're trying to get long around 122.55. It's probably where we're going to average in. Maybe we can get this level hit here. I apologize if you can hear my stomach ground because I have not eaten breakfast and it's telling me, hey man, you've been up for about 45 minutes. You ain't done nothing yet. Eat. About 4 minutes. Almost hitting the top one that we're looking for here. I want to see dollar stay below 97.65. Two minutes, numbers will release. So far, it's behaving nicely. So the idea is when the numbers hit in about a minute and a half, we want to see it drop down into 22.48. Preferably, if it does that, I'll assume a long position there. And then I can take off half of it at 22.85 hopefully giving them about 30 pips. And then I'll leave the remaining portion on to see if I can get 23.30. That's the plan. And I'll tell you that if it gets to 22.30 on the second portion, I will take all of it off there and then go flat for the rest of the day watching FOMC from the sidelines. If it gives me an entry and I take it long and it takes my stop, I'm not interested in doing anything else today. I will move to the sidelines, and yes, I'm comfortable with taking a loss going into the close if that's the case because of, again, FOMC. Okay, we're almost there. Less than 1 minute. Okay, it's about time. Okay, should be, it should drop down in there. High impact news, buddy. This is it. High impact. High impact on your patients. That's what it is. Well, that's pretty lackluster, huh? The Queen's in the room with us today. She go, hey, he's doing London now, is he? It would be very disenchanting to see it go from here and not give me the levels that I'm looking for. But that's life. That's how trading sometimes happens. And the natural impulse is, well, it could be running right now. Why don't you just buy it right now? Because it doesn't make sense for me to buy it here when my plan says it's got to go down here first. Remember, these things repeat. If it doesn't give you the price you're looking for, Wait for the one that does. Now, I haven't looked at the questions tab, but I'm quite sure some of you, at least one of you somewhere, is thinking, why am I thinking buy today? The daily has a down candle here. We broke through that candle here. So that gives us justification to believe there was buying down here. And we could expand with an impulse price swing and just run up above here. And that's all that's necessary to be profitable, because it gives us a tradable range. Now, the fact that we've waited this long, if it drops down in here now, while it still could go up to those levels we just outlined, I get far less excited about it, because we're basically going into lunchtime London. So it's a little bit of a lackluster event. Now, as an exercise, as a side note or side study, you can look at doing this right now from where it's at and say, okay, I'm going to look at this market and say I'm going to go long from where we are right now. I'm not buying it. Notice I'm not clicking on anything. But I'm saying for your notes, just for the sake of experience only, say, okay, say you were willing to take a long for one standard lot at that 122.55 level or 122.50 level. Okay, if you're willing to do that, by buying it at this premium right now, you could buy it as a study with a half of one standard lot. That way it would permit you the same reasonable amount of risk, because you're using half the position, but you're buying it at an inflated price. You're buying it above or a premium to where you would want to buy it. And your stop would still be at 22.25. And then that way you have at least a portion on in case it was to run. Okay, I'm not going to do that today, but I'm going to tell you to do that here as just a study, because we'll be doing a lot of that in the mentorship, where we'll have levels where we really want to be a buyer, but we can take small portions and scale in. And that's really what this is. We're scaling into the position. And that's wonderful when you don't get the actual level you're really aiming for to get a full entry. You can actually scale in a small portion of what you would hope to have on as a full position. In other words, if you're trying to buy, say you wanted to buy 10 standards down here, well, if it's pausing here and it's giving an indication that it may not go down into that level, you can cut that position you wanted to have in half, or even do 1/4 of it at the premium and use the same stop, and you're going to be risking far less than you would have with a full position on down here. And you get a chance to get a free look at that market potentially moving in your favor. And it's not free in case you're wondering if that's what I mean by free. No, you're just getting an opportunity to be in on the move should it take place. Now, I don't want to foster the idea that you're having to take a trade because you're afraid of missing the move. But there's going to be times where, as you're watching price, it shows a real strong indication that it's not going to give you the initial level you're looking for. And today may end up being one of those scenarios because of FOMC, because they know they have a small little window between now and 8:15, 8:30 to close that opportunity for today, because everyone's going to be on the sidelines waiting for the FOMC, which is hours away, long time away. But in the financial markets, it's important to understand that's what they end up doing. They move to the sidelines after New York 8:30 news embargo lifts, and usually it's just a real choppy, lackluster day until FOMC comes out. Yep, and I think that's what we're going to see today. We're going to probably see cable not giving me my price. It's probably going to run, and I'm going to be upset about that because here I am, I have you all in attention, and it doesn't give me the price I want. Mm-hmm. There's two things I saw you guys put up in the questions box in the live session for those that are here live. One of them was, do I think that this lackluster price action has anything to do with the elections? Well, yeah, but still, the euro is really moving. So it's not entirely that. The trade, I think, is in euro pound, which is the reason why you're seeing all this choppiness. And the other one is why don't I see that as a turtle soup sell breaking above this previous high? I mentioned that earlier in the presentation. So if you just got here, go back and watch the recording. You'll see me talk about why I believe we're going to see it go up versus this being a high of the day. It was all during the time of talking about this liquidity void. And it's all based on the fact that we're looking at the daily chart. I'm really trading the daily chart. I'm not trading a 30-minute pound. In other words, I see the levels on here, but I'm really trading the daily chart. I'm looking for these stops above 23.30. That's where the liquidity is going to draw a price. So I'm looking up here, not because it's on a 30-minute chart, but because I see it over here on the daily. Now I can tell you, I know what it feels like to watch this, and you want to be a buyer down here, and it's showing you probably it's not going to give it to us. It's going to run, without us. And if it goes to 23.30, it'll be like, oh man, I would have rather it just give me a position and let me stop out, than just run away from me and tease me. And I would end up chasing it. Like I would buy it right now. When I first got into trading, S&P would be, unwilling to go lower until I adopted. I had to see a down candle, which means the market had to trade lower before I could be a buyer. Now, that's why the order block idea came real easy when I understood how institutional order flow and how the banks price and how they work in their orders, because I already required that in my bond and my S&P trading. To be a buyer, the market had to create a down candle. And while I understand the down candle is the order block later on when it's retraded into, I was trading in the down candle. So I was already doing what smart money was doing, but I didn't have the understanding why I was doing it. I just required it to be a down move or a minor retracement, and then I would be a buyer. But I would feel real antsy, and I'd feel the impulse to be a buyer before I understood what I was doing. And as the candle that we're in right now, it could be larger than this, and it can actually engulf this down candle, and I'd be a buyer there. And those invariably were the worst trades I'd ever take because I gave in to my emotions and fear of missing the move instead of focusing on the risk. Buying here, my stop is wider between there and 22.25. If it drops down here, it's far less in terms of range, and it meets the criteria that I want to be a buyer at. If it runs from here, I just chalk it up as I was wrong about expecting this price level to be hit. I'll take the next trade. And that's the benefit of knowing what we saw in September every single day. There was something. And we're not trying to force a trade. We're trying to take a trade that makes sense. The risk is defined, and the parameters on the payout, is good. That's a good question. If it drops down into this level here during the New York Open, would I buy it? Maybe, but I would be far less willing to buy as many. Like now I'm looking to do one standard lot here. I would do half of a standard lot. And I just would not be so anxious about seeing it expand up there. Because, again, FOMC. Anything can happen with FOMC. No, it's not going to go until New York. We're going to be closing it here in about a little less than 10 minutes. Yeah, we're not going to be in here every day from London to London close. There's no way. I would burn out quick if we had to do it like that. Oh yeah, I would be definitely burnt out. I couldn't do 12 months then. Yeah, can you imagine if we started watching the market from midnight New York to 3 p.m. New York? That's the Iron Man mentorship. Now I'm muting. Well, that's what I was saying. For a study, you can see this down candle, and we're in it. So you can take a paper trade. I'm not advising you to take a live trade, but do a paper trade in here with half the position you would have taken here if it would have traded down and gave us our price. Do half that position here because it's a close proximity entry. But I don't want to get into that because then you'll be asking more questions when I'm going to be teaching it later on. Graduated small steps, folks. All right, folks, we're going to leave this for you to watch. If we keep this level intact for 7:30 to 8:30 in the morning, if we drop down in there, I may come back on through Twitter and announce my activity here. But for a study, do what we were talking about a couple minutes ago. Take whatever position size you would have done here, divide it in half, or use a quarter of that position, and use this area as a study. If you were to buy here, using the same parameters, looking for 23.30, stop at 22.25. Okay, that's how we're going to leave it for today. And I'll come back later on this afternoon with a recap, but I'll be following along the markets and tweeting charts through Twitter. I don't want to take the trade here because this is linked to the MyFX book, and I really want the MyFX book to show really high odds trades. And because it's a FOMC day, that's not a real high odds day. So that's why I'm not taking action. I would have taken it here, but it's not giving it to me, so I'm not going to buy it at a premium. Even though I know it's likely going to run, and by having a small piece on, that'll give you give you something for being here today. But for the MyFX book that I'm running for the mentorship, this doesn't cut the mustard for that. I want a really easy setup that has a lot of room and the rest of the daily range to unfold for me. And because we have FOMC later in the afternoon, it really shortens the daily range. So it's really not here. Okay, I know that there's this big volatility injection that's waiting to happen over here in time. And because of that, this is being real lethargic. So while it still could go up here and hit that level and be wonderful, yay, I was right. For the MyFX book trades, I need it to be down here. Otherwise, I'll just talk to market where it's going to go and all that business. And you can still get some kind of a feedback loop from it, do some exercises, or read between the lines. But I'm going to close this one here. Little less active than I was hoping for today, but it was a late London Open impact driver for news on the heels of it being a FOMC day altogether too. So it's a little much stacked against it for probability's sake, but nonetheless, watch the reaction here. So if you did put a position on here with half the position that you would have done here long, don't let the market go below this candle's low. Okay, at this point now, you want to just monitor price action in here. So you want to use this area where we would be buying initially the first time. That would be like the barrier at which you want to have your stop below that. So your stop would be right around in here. If you're doing the half the position that you would have done here, that's where your stop would be. Because if it's going to go, it ain't going to come down here now. It's just going to go. And if it stays in consolidation going into 7 o'clock, then it's probably a good idea to move to the sidelines and just watch it. And that means if there's a loss, you take it. If it's a small profit, you take it. You just move to the sidelines because you don't want to be going in the market ahead of FOMC, especially when it's just too many things going on right now for the market to be symmetrical. So I'm going to close it here. I'll recap again today. Like I said, 3 o'clock to 3:15, I'll have the video up so I can meet my 3:30 deadline for content being posted for video sake. And I'll talk with you all then. Until then, good luck, good trading.